Okay, we'll call the regular meeting in council for November 9th to order at 3 p.m. I'll ask for a motion from Councillor Moore that council adopt the agenda for this regular meeting council November 9th as presented.
Yes, Mayor Snodgrass, but there is one change that I would like not to add or delete anything, but just in item 3.2 or 3.3, it's a special meeting of council minutes. Or no, 3.4. Instead of special meeting of council minutes, it should be special committee of the whole minutes.
Okay, and that's on the November 2nd one, right?
Right. And I will give you that motion. Okay. Thank you.
With the slight amendment on that Emma will take care of. All in favor, consensus? Carried. Adoption of the minutes. Ask for a motion from Councillor Cooey that council adopt the regular meeting of council minutes from October 26th as presented. All in favor? Carried. That's for a motion from Councillor Kinghorn that council adopt the org meeting of council minutes from October 26th as presented.
Thank you, Mayor Snodgrass. I will give you that motion.
Thank you. All in favor? Carried. That's for a motion from Councillor McMillan that council adopt the special meeting of council minutes from October 27th as presented.
I'll give you that motion.
Thank you. All in favor? Carried. And I'll ask for a motion from Councillor Masterman that council adopt the special meeting of the committee of the whole for November 2nd, 2020 as presented.
I'll make that motion, Mayor Snodgrass.
Thank you. All in favor? Carried. And talking with Emma before the meeting, we have no public comments to go through. I don't think that's changed. So we'll move right into the investment policy item number 5.1. And I think Ray is starting this one. Yours, Ray.
Thank you, Mayor and Council. I can kick this off. We will have CIBC, which is Charette Shahal, hope I'm pronouncing correctly, and James Hobson with CIBC Wood Gundy. We've got kind of a two-part to this presentation. They'll start with the investment portfolio, give us a summary on how it's doing, introduce the changes that we're looking for to our investment policy. I'll take over from there, finish up the presentation, and walk council through those changes and be asking for a motion to adopt the policy. So take it away, James and Charette.
Thank you very much, guys. What I will do here is just share my screen as well, just so you guys get a, just make sure. And just want to make sure everybody can see what's up there. Perfect.
Perfect. Well, thank you all for having us attend this evening. We really appreciate your time. So we've been managing the town's portfolio for a few years now. And basically what's happened is the market environment, no surprise, has changed materially throughout this pandemic. So what we want to do basically is take a look at the policy that was last approved, last revised in 2012, and update it so that it's sort of current with the current market environment. So I'm going to walk you through sort of an update on how the portfolio is done, and then Charlotte will walk you through the changes to the policy. So don't peg us to these returns. The portfolio has performed materially better than we could have ever expected, largely because we invested the funds at interest rates that you just can't get anymore. So 2019, the portfolio was up 6.6%, and these are all principal guaranteed bonds. And then year to date, the portfolio is up 4.59%. So Obviously, those returns are materially higher than the yields on the bonds. And the reason for that is simply because interest rates have fallen and the value of our bonds have increased. We were also able to make some pretty well-timed switches in the portfolio surrounding the pandemic, which worked out really well for us. So just to give you an update on sort of what we're seeing here in the market, we're in an ultra low rate environment, historically low. So you can see back in 2018, the Government of Canada 10-year bond yield was 2.5%. Today, you're sitting around 0.5%. So the basic message here is that we need to update the investment policy so that we're sort of in line with the times. This is a material shift, and we need to make some changes to make sure we're getting the best return we possibly can for the town without taking on any additional risk. Credit spreads, this basically just shows us the extra return we get on bank bonds versus Government of Canada bonds. No surprise here. Basically, we saw a big spike up during the pandemic, but they've come down materially. So this hasn't helped in terms of the rates of return we can get out there on bonds, which again is sort of leads into the rationale for what we're suggesting here. Now, this is the yield curve. This shows us, this is basically what we look at almost every day. So this shows us the interest rate we get on different principal guaranteed investments of different terms. The dotted line is the Government of Canada bonds, the blue line is provincials, the dark blue is banks, and the orange is BBB corporates. So the main thing to point out here, if you just want this simple explanation, is quite simply the bank curve is much higher than the provincial curve, meaning that we're getting paid a lot more interest to own bank guaranteed bonds versus holding provincial bonds. Now, the current investment policy, again, back in 2012, this made sense. It mandated that we hold 25% in provincial bonds, but in the current market environment, we're only getting 1% on a 5-year provincial bond. We can do much, much better than that in a bank bond. So Chart will get into this a bit more in detail, but in summary, the interest rates we can get on bank bonds much better than provincial bonds, and that's the thesis for these changes to the investment portfolio.
So thanks, James. The biggest thing for us here, James talked about it, is the market has moved materially in the sense that we are no longer being compensated enough, and we're basically being restricting ourselves for the investment portfolio for owning too many provincial bonds. And the one thing it's always important for us to take a look at is from a legislative perspective, are we still what are we doing in terms of the changes we're requesting? Are we still okay legislatively? And two, from an actual risk perspective, what are we doing to the municipal portfolio? What are we doing in terms of increasing risk, decreasing risk? What does that actually look like? So that's what I'm trying to explain here. When it comes to actual issuers of bank bonds, most important thing we want to look at is the bank rating, the debt rating that the issuer has. What we are suggesting here is investment grade only bonds and not the BBB line. We're saying A, AA, and AAA rated only. All financial institutions, all provincial bonds are in that A rated category. So from a risk perspective, it is not even looked at as taking additional risk, because if we look at who the types of issuers are, all the major financial institutions are of the same credit quality, and that's the key piece there, as a lot of our provinces. So we're basically getting paid more for taking less, just moving in terms of risk, no additional risk. We're being compensated for taking additional. So what we're trying to do here is just adapt to the times, because the current portfolio restricts how much bank bonds we can own, which essentially handcuffs us in terms of getting a better rate of return when we're not actually having to take any increased risk. Now, that's it from a credit risk perspective. Most importantly for us is the Municipal Government Act. Are we still within parameters of the Municipal Government Act? Short answer is yes. The only thing the Government of Canada explicitly pushes out there is securities, stocks, anything not principal guaranteed. Everything we're suggesting here is fully principal guaranteed. It's guaranteed by a bank, guaranteed by a province. Those are specifically highlighted in the MGA, and we're still within that policy. So we're very comfortable there. Now, the exact specific changes Right now, the investment issuers, what we want to do in the policy is remove the requirement to hold provincial bonds in the portfolio. We currently have a minimum requirement of provincial bonds that we're supposed to hold in the portfolio. It is also required to hold a minimum of 25% of provincial bonds. And what we want to do is switch that. And the last thing we want to do is increase the allowable bank issuer from 25 to 35. So we talked a little bit about the first two. The issuer restriction is we essentially can only put up to 25% of the municipal money in CIBC, TD, Bank of Montreal's bond. It needs to be diversified across the board. That is a little bit restrictive. The norm that we usually see per issuer is 35%. So if we were doing a full investment policy review here, we just wanted to make sure we updated that piece as well. And then the last piece there, that table, you can kind of see what we're highlighting and changing, moving the Canadian chartered banks, and it needs to be a Schedule I chartered bank, from a maximum of 50% of the portfolio to unlimiting us on that side, and then adjusting the issuer as well. And again, the rationale, I'll sum it up real quick. Schedule I chartered banks carry the same bond ratings as the provinces, so we're not increasing any credit risk. Bank bonds currently have much higher yields than provincial bonds without reducing safety principles. So James talked about that, where you do get compensated above and beyond for owning bank bonds over provincial bonds. And the 2012 policy needs to be updated to reflect the current market conditions. This is something that investment policies are they're a living, breathing document. So you want to make sure that it's always updated with the current times. Obviously, 2012 was drastically different than what Alberta looked like in 2020, barring even the pandemic. This ultra low interest rate environment is with us for quite some time now. And the Bank of Canada has kind of come out and said that this is the expectation and the new norm going forward. So we just want to make sure that the policy is adapting to what the current state of the economy is doing. And that's very quickly, we shot it out there for you guys, but that's specifically because we wanted to leave a lot of time for questions.
And just as a comfort level, Chart and I oversee portfolios for 22 towns, 16 counties, and 11 cities. This is a trend that we've seen across the board. We've done a lot of investment policy updates in the last couple of months, just to respond to the just drastically different conditions that we're in right now. So thank you very much, and we'll happy to answer any questions that you have.
Excellent. Thanks, guys. Ray, anything to finish?
Yeah, I just want to point out to council the policy itself. So we've, in order to bring the policy up to date to our current standards for our policy format and wording, we're basically presenting a new policy to replace the old one. So the red line version's got a lot of red lines through it. It's better to just view the current or existing policy that we're suggesting. I just want to draw to your attention on page 22 of your council package. That's where the table is, where the meat of our change is, where we're suggesting up to 100% of our portfolio could be in chartered bank holdings, but only a maximum of 35% from any one bank. That's in the policy is page 8, which is page 22 of your council package. That's the biggest change. The rest of it is wordsmithing and formatting, but that's really the big change for council to pay attention to. And of course, Therese and James will stay online, and I'll be here for any questions as well.
Okay, thank you. Councillor Nychuk.
Thank you, Mayor Snodgrass. My only question at this time is, does the change in, I guess, these allowable percentages, does that change the remuneration structure with you guys at all?
No.
Thank you.
Councillor Cooey.
Thank you, and thanks very much for the presentation. Just a quick explanation on slide number 8, the exception required. Just give me a quick explanation on that.
Yeah, so basically, if you want to own anything at risk, and a lot of the big cities, City of Calgary, City of Medicine Hat, and City of Edmonton, because they have such large portfolios out there, they were able to get exceptions to own stocks, actual at-risk equities within the portfolio. So if you wanted to own that, you would have to get a special exemption from the to get out of the MGA, which they have, which we don't ever play in that box because the additional compensation is not going to make anything material.
Awesome. Thank you. I appreciate that.
I just want to add to that briefly. So that is, we'd have to apply to the Minister of Municipal Affairs to get that exemption. So it's possible, but that's not what we're seeking.
Councillor Moore.
Thank you, Mayor Snodgrass, and thank you guys for your presentation. When you were going through the presentation, you said that the investment policy was good in 2012 for that time, which meant that maybe the provincial governments were in a better position at that point. Is there a time in the foreseeable future that you think that the provincial line will outweigh the bank line?
Probably not.
Yeah.
So just to clarify, we're just adjusting the allowable ranges. So in the future, if it makes sense to own provincial bonds, we certainly will. But we're just removing, because right now in the current market environment, we're not getting paid much at all to own provincial bonds.
And so from the investment policy perspective, we're just increasing flexibility, which would allow us, if that scenario ever came true, it would allow us to flip back and own more provincial bonds. We're not handcuffing on the provincial bond side, but to specifically address your question, if we see the yield curve flip in terms of provincials paying you more than banks, Canada as a whole has a larger issue there, because we're basically saying our money is safer with banks than it is with government, which is historically a weird situation to persist. So you should always get a spread above provincial bonds. It's just how much is that spread going to pay you?
Okay. Thank you. When you mentioned the banks, I didn't hear the Royal Bank in the portfolio. Is that RBC Dominion Securities a separate entity?
So RBC would definitely be an allowable issuer for us. All the big five charter banks. So RBC, Bank of Nova Scotia, BMO, CIBC, and TD. Those are the issuers that we're going to be investing in.
Okay, great. Thank you.
If I may, I just want to make sure it's clear when Charette and James are saying how much we're earning on the portfolio, it's not for CIBC Wood Gundy. They're speaking corporately, how much is being returned to the town as an investment income.
Councillor McMillan.
Thank you, Mayor Snodgrass, and thank you very much for your presentation. I think my question might be more to Ray about our actual policy, but it's on page 36 of our package, or 21 of, I guess, the investment part. But it's number 3 about delegation of authority, and I just want clarification around authority to manage the investment program is granted to the CAO, and responsibility of the operation of the investment program is hereby delegated to Director of Corporate Services. So I guess where I just want some clarification is, why is the Wood Gundy not mentioned in that particular clause about overseen, or is that because we're talking on a high level that it's being overseen within the town? Is that what that's about?
Yeah, so what the delegation of authority is just trying to capture that the policy overall is under the direction of the CAO, and he's then delegating that to Nicole as the Director of Corporate Services, which we then we engage our investment managers, which is CIBC Wood Gundy, to manage that on the town's behalf. But it's just trying to state how much, what the levels and the steps are for the authority within the policy.
Yeah, and just to add to that as well, because your investment policy is always going to be an internal document, you would hesitate to put someone external on there. So for whatever reason, let's say CIBC wasn't your investment advisor, it was RBC. That investment policy just lets us know who is allowed, who we're supposed to engage as well.
But any changes to the portfolio are always approved by administration before we do anything.
Okay, so I guess just putting my policy hat on, I don't understand why we wouldn't just have in brackets generic to applicable financial investment firm. I'm not sure, because when I look at this, I find it rather vague. That's all. So just something it could just be a a Carol McMillan thing, but I find it kind of vague when I look at that.
Okay, so where we try to address that, Councillor McMillan, is in the roles and responsibilities where we define the external managers.
Okay.
So when we talk about the external fund managers, we mean CIBC Wood Gundy or whoever's appointed by the town. So it's addressed in the policy, but maybe the language maybe isn't as clear. We're hoping it to be clear is the idea, of course, but perhaps we didn't hit the nail on the head in that regard.
I think it's quite clear. I just think, I just think the verbiage could be a little bit more like, we know how the policy works, but when I'm thinking about the citizens, it might not be bad to have just in brackets refer to that, exactly how you worded it, Ray, the outside. I think you know what I'm getting at, like the outside, because I understand, I totally get that we can't name a particular branch because that could change, but just about the external, like C clause such and such with the definition of the external. Just a suggestion.
Okay.
Thanks, though.
No further questions. Thanks very much, guys. Well done.
Thank you.
Thank you.
Appreciate it. Thanks, Ray. That's for a motion from Councillor Nychuk. The council adopt the investment policy FINPOL 104 dated November 9th, 2020, and the council rescind the investment policy POL 1610102.
Mr. Mayor, I'll make that motion for you. Thank you.
Thank you very much. All in favor? Consensus? Motion is carried.
Thank you, Council.
Again, Ray. Curling facility lease. Darlene?
Good afternoon, Mayor and Council. I'm here this afternoon because the town of High River wishes to update the community facility agreement with the Highwood Curling Club as directed by Council at the August 10th, 2020 regular Council meeting. Based on direction from Council at that meeting, administration met with the Highwood Curling Club to negotiate a community facility license agreement for the occupancy of the operation of the facility currently located at 228 12th Avenue Southeast, High River, Alberta, legally described as Plan 1896 JK Block 3. The mutually agreed upon agreement is proposed for a term of 1 year at a cost of $15,700 for the 2020 to 2021 season, with an option to renew for an additional 2 terms as mutually agreed upon. The cost was determined based on the Highwood Curling Club's request of no rental fee and administration's August 10th, 2020 proposed $31,400. This resulted in administration splitting the 2 amounts, resulting in a rental fee of $15,700. This amount also aligns with Council's direction that the rental fee was not to exceed the $31,400 originally brought forward on August 10th. The renewal of the community facility license agreement between the town and the Highwood Curling Club was originally proposed for a 3-year term. However, due to current slab conditions and the authorization from Council on September 14th, 2020 for the submission of a municipal stimulus program capital project application to replace the curling slab in 2021, administration has proposed a shorter term. The term of 1 year allows for a reduction in rent to address current conditions, which has negatively impacted the Highwood Curling Club's ability to host provincial or outside events, while allowing administration to revisit this rate upon completion of the slab replacement. It is therefore recommended that Council authorize the Mayor and Chief Administration Officer to execute a community facility license agreement with the Highwood Curling Club for the occupancy and operation of the curling facility for a term of 1 year, with an option to renew for an additional 2 terms as mutually agreed upon at a cost of $15,700 for the 2020-2021 season.
Thanks, Darlene. Just to clarify, so this 15.7 is for this year. And then when you're saying with the option to renew for a couple more years, but that would be a different number that would be negotiated, correct?
That is correct.
Okay, thank you. The 15.7 wouldn't stay for 2 more years, just
No, we felt once the slab was replaced, that would take care of their issues with outside events and that sort of thing.
perfect. Yeah, understood. Councillor Masterman.
Thank you, Mayor Snodgrass. Darlene, thanks so much for the report and the recommendation and all your work on this as well, and your team. I just had a really quick question. Obviously, this is an agreed upon amount, but I'm just wondering if you can say in general terms what the curling club thought of this amount, because it's obviously more than what they had asked for, but less than what we were going to do. So can you just speak in general terms, Darlene, about that?
After our meeting with the Highwood Curling Club, they were very receptive to the agreement of splitting halfway the cost. So we had no issues with that.
Okay, thanks.
Councillor McMillan.
Thank you, Mayor Snodgrass, and thank you very much, Darlene. And just to speak further to what Mayor Snodgrass mentioned, I just want clarity regarding the actual motion that we have presented to us. The final part is, be it resolved that council authorize the mayor and CAO to execute a community facility license agreement with the Highwood Curling Club for a term of 1 year, being October 1st, 2020 to April 30th, 2021, at a cost of $15,007. So there's no mention of, with the ability, like what we're being presented for the resolution, there's no mention of the whole renegotiating on a year-to-year basis. So I just wanted to confirm that we're just basically, the resolution is about October 1st, 2020 to April 30th, 2021, correct?
Yeah, well, it should speak to the whole agreement, which includes the 15,700 with the options for renewal within that agreement. Jody might be able to speak better to that. I know she's attending this meeting as well.
Yes, thank you, Councillor McMillan, for the question. The agreement is drafted so that there are the 2 one-year options for renewal. And then it does mention in the agreement that the 1-year rates are to be mutually agreed upon, because at this time we wanted to leave it open to show that we do want to renew, but that the rates will be dependent on whether or not the slab is replaced. So it's difficult for us to say right now what that rate would look like, but we wanted to make sure that the option for the curling club was secured without tying it to a specific rate at this time. So the agreement is written that way. I'm not sure if we need to edit the resolution to reflect that.
I think I would suggest that we do amend the resolution to reflect that, because as I read it right now, it's so finite, right? It's, here it is for this year without, and I think it's important to have that portion where you're saying with the option to renegotiate, because especially perhaps there's a new council next year, and when budget time comes and you look at this and it's, well, that was a 1-year term, c'est la vie. So I kind of think it would be kind of good to add that component about with the option to renew. Just my thoughts.
And we can do that. I don't know that it's necessary though, Councillor, because we are authorizing to execute a full community facility license agreement with the Highwood Curling Club, with that detail that is embedded within that agreement. So there is no way just because you put it in the motion, it's already there in the agreement.
Fair enough. That's a good point.
It's there and it can't go anywhere. So it's.
I just want to make sure to protect the curling club.
Yeah, absolutely. Oh,
And also the fact of consistency with what we're, the motion and the agreement. So,
yeah,
but yeah, I see your point. Fair enough.
it's in that agreement. So I think we're okay
Okay,
to
thanks.
protect that. I get what you're saying. Councillor Cooey.
Thank you. Thanks, Darlene, very much. Just curious, this budget amount, has it been incorporated into next year's budget?
That's a good question. I don't know. I'll probably have to get back to you on that.
I see Chris has popped up. He's maybe going to answer
Okay.
that.
Yes, Mayor Snodgrass, through the Councillor Cooey, it has been incorporated into this year's budget.
Thank you.
Well done getting that done, Darlene. No further questions, so I'll ask Councillor Cooey for a motion that council authorize the mayor and chief administrative officer to execute a community facility license agreement with the Highwood Curling Club for a term of 1 year, being October 1st, 2020 to April 30th, 2021, at a cost of $15,700.
I will give you that motion.
Thank you. All in favor? Motion is carried. Thanks very much, Darlene.
Thank you.
You're on mute, Craig.
Thank you very much. The infrastructure funding letter. Chris, have we heard anything more back from the government?
Nothing as of today's date, Mayor Snodgrass and the rest of the council, but it is, the tone of the letter is a little concerning from our perspective. And so we just want to make sure council was aware of that. And if we have opportunities to speak to MLAs or ministers to continue to stress the importance of the funding that we get from the province for the MSI grant and both the operating and capital side of things. So it is a bit concerning, the language, and I understand where they're coming from, but that is important funding for us.
I just don't trust it with what they're doing in the rural environment. You know, picking the low-hanging fruit as to where to get money from, but we'll keep an eye on it.
Yeah.
That's all I had on that one. No other questions from council? Meeting adjourned, 3:32 p.m. Thank you very much. Run over to that Teams meeting that I thought, just for that quick discussion. See you in a minute.